Hello, and thank you for joining me. I'm Suraporn. We're about to discuss something huge that's happening right now in Thailand's tax world. And believe me, this isn't just a small change. We're talking about a complete overhaul, a new era driven by global rules and some very powerful AI technology. And it's going to touch every single business in the country.
So I have to ask you, and it's really the most important question today, is your business ready? I mean, really ready? Because these changes we're going to walk through, they're not some far-off idea. They're happening as we speak, and they're going to affect everyone, whether you're a big corporation or a small family business.
All right, let's get into it. Here's our roadmap for today. First, we'll look at why this is all happening, Thailand's new global step. Then we'll get into the specifics, the overhauling of tax rules, and something really interesting, the rise of AI inspectors. We'll also cover how the digital world is being taxed. And most importantly, we'll finish with a clear action plan for your business and a look at this new future of transparency.
So let's start with the big question. Why is all this happening right now? Well, it's not something Thailand is doing on its own. The reason is we've begun the process of joining the OECD. That's the Organization for Economic Cooperation and Development. The best way to think about it? It's like we're joining a prestigious club, a club for the world's major economies, where everyone agrees to play by the same set of rules. And this is a really big deal. By getting in line with the OECD, we're essentially upgrading our entire financial system. The main goal here is to make sure Thailand can compete on the world stage. It's all about creating an environment that's fair, predictable, and frankly, more trustworthy for everyone involved in business.
Everything the OECD does really comes down to three big ideas. You see them here: transparency, fairness, and a very firm stance against tax avoidance. These three principles are the foundation for everything else we're going to talk about today. So keep these words in mind.
Okay, so we have these principles, transparency, fairness, but what does that actually mean in practice? How does it change the rules? Well, let's look at the first change, and it's a big one, especially for the large multinational corporations out there.
It's called the Global Minimum Tax, or GMT. You've probably heard about this. For years, there's been what people call a race to the bottom, right? Companies would find clever ways to shift their profits to countries with super low tax rates or even no tax at all. Well, the GMT is designed to put a stop to that. It's a global agreement that says, no matter where you make your money, you have to pay at least a certain baseline amount of tax.
And what is that baseline? It's this number right here, 15%. That's the magic number. It's the new global floor. So for these large companies, it doesn't matter where they officially book their profits anymore, they're going to pay at least a 15% tax on them.
And this really shows you the fundamental shift. You know, the old way was all about complexity. Companies would build these incredibly complicated structures, all designed to shuffle money around and pay as little tax as possible. The new way? It's just simpler. You pay a minimum of 15% on your profits. That's it. It brings a lot more fairness and, honestly, makes compliance much more straightforward.
Now, it's not just the rules that are changing. The way those rules are enforced is undergoing a massive technological revolution. Thailand's revenue and customs departments are going digital in a big way. And the star of the show is artificial intelligence. You really can think of it as a brand new type of tax inspector, one that's incredibly smart and never needs to sleep.
And don't think this is something for the distant future. The timeline is set in stone. Look here, Phase 1 of mandatory e-tax invoices starts in 2026, and by 2027, every single business registered for VAT will have to be on this system. The clock is definitely ticking, so now is the time to prepare.
So you might be wondering, how does this AI audit actually work? It's pretty straightforward, really. First, your business submits its tax information electronically using the e-tax invoice. Second, the AI system immediately analyzes it. We're talking instantly, in real time. And third, if it spots anything unusual, any red flags or strange patterns, it automatically flags that account for a human to review. It's like having a super sharp auditor looking over your shoulder 24/7.
Of course, a lot of business today happens online, so these reforms are also catching up to the digital world. The main idea here is pretty simple: fairness. It's about making sure that an online business plays by the same tax rules as the traditional shop on the corner. And this means a few key changes. For one, that old 1,500 baht import exemption for e-commerce packages, that's gone. Also, foreign companies that sell digital services to people in Thailand, think streaming services or software, now have to register and pay VAT. just like a local company would. And finally, they're getting serious about digital assets like cryptocurrencies. New rules are coming, and we're getting ready to share crypto transaction data with other countries through a new system called CARF. So everything is becoming much more transparent.
Okay, so we've talked a lot about the what and the why, but now we get to the most important question for you and your business. What do you do about it? How do you prepare? Let's get practical. Here's your action plan.
The key here is not to wait. You have to be proactive. So here's a simple checklist to get you started. First, you need to upgrade your systems. Make sure you can handle the new paperwork for the global minimum tax and something called transfer pricing. That's just the fancy term for making sure the prices you charge between different branches of your own company are fair. Second, you have to invest in the right tech for sending your e-tax data securely. And third, a point we'll come back to, make sure every transaction is transparent.
And I really want to double down on that third point about transparency. This is where something called the arm's length principle becomes absolutely critical. All it means that when one part of your company sells something to another part, the price has to be fair, the same price you'd charge a completely unrelated customer. In the past, this was a bit of a gray area. Not anymore. With an AI watching every transaction, this is now a non-negotiable rule. The system will spot a deal that doesn't look right in a millisecond.
So when you step back and look at the whole picture, you've got the new global rules, you've got the AI auditors, you've got the new digital taxes, it all points in one direction. We are moving into a future where tax transparency isn't just an ideal, it's the reality.
And I think this quote from Ninfan Srisukumbora at PwC Thailand really sums it up perfectly. She says this reform is both a challenge and an opportunity. And that's the key word. For businesses that are prepared, this is a chance to compete in a much fairer, more modern, and tech-savvy environment.
What this all boils down to is that the old ways of doing things are over. The combination of countries sharing tax data instantly and AI systems analyzing it in real time, well, it's going to make those old, complicated tax avoidance schemes basically impossible. They'll become relics of the past. The entire system is being rebuilt to reward transparency, not complexity. So this leaves us with one last big question to think about. When tax agencies around the world are all sharing data, and AI can watch every transaction as it happens, are we actually seeing the end of tax avoidance as we know it? Is it even possible anymore? That's a question I think every business leader needs to be asking themselves. Thank you for your time today.